What's going on? Welcome to the Credit Plug channel. Over the past couple of years, we've been putting out a lot of information when it comes to business lines of credit. In today's video, I'm going to be discussing some considerations that you may not have thought about when you first applied and got approved for business lines of credit. Right here, I have a line of credit that recently it came to its full term. So it was a 24-month term. And so now I'm up for renewal, and this is the DocuSign that the lender actually sent to me. Now, some of these things just to keep in mind. So this was just a $50,000 line of credit. This will be maturing in 2026, August of 2026. Some considerations, right? So down here, there are a handful of fees just for the renewal. So one thing was they did pull credit again. They did charge a document fee as well as a loan renewal fee. So it's a total of $800 in fees to renew the line of credit for $50,000. So that's always something that you want to consider. So today I really just outline just some key considerations for business line of credit renewals. As we just talked about fees, so you have things such as renewal fees, there's credit fees, there could be document fees, and depending on the lender and the amount, sometimes they will charge a UCC filing fee if they are going to put a blanket lien on your business assets. In this case, that wasn't applicable, but there are certain fees associated when it comes to lines of credit, especially business lines of credit. One of the most important things you want to think about is the renewal terms, right? So I know it's great when you do get approved for a line of credit, but how long do you actually have to deploy that capital? So you really have to think about how long are you going to have access to this business line of credit before you could actually come for renewal and have to essentially go through underwriting all over again, right? So there's terms from, let's say, 1 year, and I've seen some out to 6 years. And then there are some lines of credit that are just indefinite, right? So there is no official sort of renewal process. So for this $50K line of credit that I just got renewed, essentially I had to go through the underwriting process again. When you come for renewal, you basically have to meet the same underwriting criteria that you did initially. So you will have to provide your latest financial statements. They will do a credit check. They might look at, for example, trends in your revenue or your net profits. It's not just a matter of, initially getting approved. If your data points vastly differ from when you initially got approved to when you're coming up for renewal, you may not be able to renew based off of your current financial information. So one of the things that they can do is actually either decrease your line or just not approve you for the line at all. So that's just one thing to keep in mind. When you do come for renewal, sometimes they may want to re-underwrite you. Now, some of you might know about the Goldman Sachs line by Marcus line of credit, business line of credit, and every year it comes for renewal, but they're not really asking you about, tax returns, financials, profit and loss statements, anything like that. That seems to just be an automatic renewal based on your history with that account. So we have First National Bank of PA. That line of credit does not expire, so there's no definite term. You have the American Express business line of credit as well, another indefinite term. As I said, Goldman Sachs BLOC, it does have a 1-year renewal. Chase business lines of credit have a 5-year term, so you don't have to come for renewal until after that 5 years. West Banco also 5.5 years. So theirs is actually 66 months, which is the max term. And then you have the Truist business line of credit, which is 3 years. So just keep this in mind, right? And this will actually inform how you could actually leverage the line of credit, because, if you have, let's say, a 5-year term versus a 1-year term, that might change kind of, what your activity is like with those line of credit. Are you going to use that line of credit to go invest in some long-term real estate, or are you going to use that line of credit to just use for short-term expenses, right? So if you have a 1-year line of credit, maybe you're not using that for long-term real estate. What usually happens at the end of that term, either you pay the line of credit off, or they will just convert whatever balance you have into an installment loan, and then you just pay that off over a specific term. But yeah, it's just really important to understand the term. So like I have a West Banco line of credit. If I do decide to utilize that for a particular purpose, I know I at least have, 5 5.5 years of runway using that line of credit where they're just charging interest only. So again, this is something I think a lot of people overlook. I know it's great just to get approved for a line of credit, but if you understand the term, when you come up for renewal, maybe 1 year you have a down year. And so if you're going up for renewal, that could actually be detrimental. So just pay attention to the term when you're applying to these lines of credit. Another important factor to consider is the UCC filing thresholds. So secured versus unsecured. Here's a misconception a lot of people think when you see secured, people think that you have to specify a certain piece of collateral in order to get the line of credit or to collateralize the line of credit. Basically, when there's a UCC, that's just a blanket lien on all of your business assets, right? A lot of lenders want to be in that first position. So even though you don't specify, oh, this piece of equipment or that piece of equipment or this business asset or that business asset, when a lender puts a UCC on your business profile, they're basically providing public notice that, hey, we have a lien position or we have a security interest in the assets of this business. So it could be all of your assets. It could be up to a certain amount to where they're made whole based off of the loan that they issued to the business. So it doesn't necessarily mean that it's specific, like I'm using this vehicle to collateralize the loan, or I'm using this inventory to collateralize the loan. It can be all of your business assets. So it doesn't have to be a specific asset. So anytime you see a UCC, that is a form of secured lending. Unsecured is going to be where there's no UCC file. Another major consideration is going to be the limits and the rates. So when it comes to the rates, you're looking at either the prime rate. So this is referred to as the bank lending rate or the prime lending rate. And you also have SOFR, which is the secured overnight financing rate. Now, here's a quick example to illustrate, right? So Chase essentially has two different business lines of credit, right? So they have the Chase business line of credit, and then they have the commercial line of credit. And there's a couple major distinctions. So the Chase business line of credit is going to be from $10,000 up to $500,000 with a 5-year revolving term, whereas the commercial line of credit is going to be for more than $500,000. And these have initial terms from 1 to 2 years. So these are a little bit different, right? The commercial line is going to be obviously for larger businesses. The Chase business line of credit is going to be for smaller businesses. And in terms of the rate, so the Chase business line of credit is indexed to the prime rate. So I was telling you guys about the prime rate, which currently sits at about 8.5%. So usually what a lot of these lenders do, they'll do, let's say, the prime rate plus a margin. That could be 2%, 3%, 1%, whatever the case is. Now, the commercial line of credit is indexed to the SOFR. And so just so you understand sort of what the differences are, right? Right here, the bank lending rate, as I was saying, this is the prime rate. This is currently at 8.5%. Then you have the SOFR, which stands for the secured overnight financing rate, which is 5.32. Most of the time, I would say in small business lending, you're really going to be looking at the prime rate or the bank lending rate. Once you get up to like larger credit facilities, then the secured overnight financing rate is a little bit more common. I usually see the SOFR when we're talking about, let's say, warehouse credit facilities or just large commercial types of credit lines. Now, the main takeaways I wanted to give you guys is just to be aware of these different terms when it comes to the business line of credit and what requirements you have to continue to meet to keep the line of credit. Because again, a 2-year or a 1-year term, that can go by really fast. And you just have to be mindful of when that line of credit is going to mature, just so that you're prepared if you do want to renew it. Another thing to consider is whether or not you want to continue with the line of credit, right? Because as I just showed you with my recent line of credit renewal, they do a credit check. So it is a hard credit check. I did have to provide several forms of financial information, and basically the last 2 years of financial information that they did not see, because again, when I applied 2 years ago, I believe it was 20 and 21 financial information. This time around, they wanted to see 22 and 23, as well as year-to-date 24 financial information. So you really have to decide whether or not it's worth going through that process again to maintain that line of credit, or would you rather just go to a different bank which may be able to offer you a higher limit or better terms. Ideally, lines of credit that give you longer terms will allow you to have more flexibility with those funds. So if you wanted to invest in a franchise, do a business acquisition, or even purchase some real estate, you just have longer runway for repayment. Anyways, that's all for today's video. Let me know your comments and questions right down below. And until next time, take it easy and we'll talk to you.